Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market alert for Tuesday, September 13th. The global markets seem to be searching for direction this morning, amid conflicting reports about a possible deal on Italian debt. Overnight, the Financial Times and other media outlets reported that Italy's finance minister had met with a delegation of Chinese officials last week. But according to Market News International, a senior banking official in China said the government may not agree to buy Italian debt because of the instability of the European bond markets. Following that report, the average yield on Italian government debt shot up to 5.6% amid slower demand. The average yield had been below 5% just 2 months ago. Meanwhile, the markets across Europe have given up some of their earlier gains. An 8% drop in shares of BNP Paribas is dragging down French stocks. The bank denied that it's facing liquidity problems after an op-ed column in the Wall Street Journal cited an unnamed source saying it was having trouble getting dollar funding.
Taking a look at the currency markets, Europe has shown some strength earlier in the session in the wake of that initial report about a possible Chinese purchase of Italian debt. But that trend has reversed, and the shared currency is now facing more selling pressure. Overall, the dollar is gaining ground against most of its major rivals. But despite the advances in the dollar, commodity prices are moving higher as well. Gold is rising back above $1,820 an ounce. It fell 2.5% yesterday as investors were forced to sell the precious metal to cover losses in equities. Meanwhile, crude oil is gaining about $1 and is now back above $89 a barrel. The International Energy Agency cut its forecast for oil demand this year and next because of the slowing global economy. But it warned that prices may stay high for some time because supply problems are likely to persist despite the restart of oil production in Libya.
On the corporate front, we're not seeing too many big stock movers this morning, but we are keeping an eye on Lockheed Martin. Goldman Sachs removed the defense contractor from its conviction sell list and upgraded the stock from sell to neutral. Meanwhile, chipmaker Intersil may gain some ground. After Monday's closing bell, it warned that revenue in the current quarter may fall short of expectations. But the company's CEO said inventory is stabilizing and the stock is gaining 3.5% in the pre-market. Finally, investors are also digesting Best Buy's earnings report. We'll bring you all those numbers and all the market reaction after the opening bell.